Well, despite a challenging business environment and a strong Aussie dollar, serviced offices operator Surfcorp has clocked in more than 8 million Aussie dollars for the first half profit. While it remains bullish on China and says it plans to hedge against slowing markets and global volatility through a structural change in focus for its business strategy. And earlier I spoke to Surfcorp's Chief Operating Officer, Marcus Mufarij. He tells us more about the plans to slow the pace of expansion and the impact on profit growth this year.
Yeah, there was somewhat of a perfect storm when the global financial crisis came for us, a global storm of opportunity, if you like, to expand quite dramatically as commercial rents around the world were quite heavily impacted. And that opened an opportunity for us in the US, and it was the combination of the lowered rents and a point of development that we were at with our technology to build the Surfcorp Global Network platform that said it was time for us to scale our business up. And so we've done that. And, in terms of buying at the bottom of the market, I think we've done that pretty effectively. It's probably taking a little bit longer than we expected for the market to rise off the bottom, and I think everybody's in the same boat in that regard. We think it's good for us to consolidate the profits around those centres that we've expanded, particularly across the USA and also with some locations in the Middle East, and have a look and choose specific markets that we think have, present a lot of opportunity.
Surfcorp also operates in 21 countries across the world. How do you manage the forex volatility and also the strength of the Aussie dollar? You obviously don't collect rent in Aussie dollars.
Expanding in the US with a strong Aussie dollar is a good thing because our losses in the US aren't as great as they might be. And I think that, if you look at that as a natural hedge, if the Aussie dollar then contracts in the next 12 months or 24 months, we're going to look like fantastic currency managers, but that's part of the operations of the business. I also think that because there's a strong relationship in the currency trades between Australia and Japan, they're our two biggest markets, and so we've had to work with that over an extended period of time with the way that the strength of the Japanese yen and now the strength of the Australian dollar. So I think we can put it down to experience.
There are also expectations of a slowdown from the US, Europe, and even in China. How are you adjusting to the changing economic climates in these countries? And are there also other regions that you think might kind of compensate for that slowdown?
I'm quite bullish on China, and so I think that our focus will shift from Australia and Japan and putting a bit more emphasis on China, but we still haven't quite cracked the China nut, and I think a lot of people are facing that challenge, but I think that presents our greatest opportunity moving forward. From a structural change in the business, Surfcorp has transformed itself from being a property company and just selling offices on a short-term basis, buying it on a long-term basis and selling it on a short-term basis, to really being a technology services company. And I think that transformation is what is going to protect us moving forward as there continues to be downward pressure on commercial real estate, because the serviced office business is very affected, very cyclical, but the virtual office business is much less cyclical. So we've found that by transforming our business from a property company to a technology company and investing in our global network and essentially becoming a cloud voice provider to many SMEs, 35,000 small to medium enterprises and teleworkers around the world, we're finding that is actually probably the best way to tackle the challenges that lie in the new normal economy.